Let's talk about PNC Bank. Good old Pennsylvania Bank here on the day. PNC Bank shares, they're moving lower though. Dang it, down by about 1.5%. This comes after the bank posted lower earnings for the third quarter, saying it expects inflation rates to impact the bottom line into mid-2020. The so-called super regional bank saying high rates will play a big role in business and investment and consumer spending. I didn't call them super regional just because I'm from Pennsylvania, but hey,
both of us
they
from
are.
Pennsylvania.
Both of us, exactly. Same area, greater Philadelphia area.
Yeah, exactly. When you take a look in this report, revenue coming up just a bit short. Deposits were also just shy of what the street was looking for here. The company, though, trying to get ahead of some of the tougher economic environment, tougher quarters that could be ahead right now, cutting their workforce by just about 4%. They're saying that they actually expect that move to save the company about $325 million next year for 2024. So certainly some fallout here from the higher rates, continuing to weigh on profitability here. Profit did top expectations. It is, though, down on a year-over-year basis. So important to keep that year-over-year comparison in mind here. And the reason why so many on the street pay close attention to PNC is because of the size of it, right? Yeah. It's the second largest regional bank. We know the regional banks certainly have been under tremendous amount of pressure at the start of the year. Started to see some stability over the summer, so certainly a lot of focus here on what we're seeing from PNC. So a bit shy in some of these headline numbers here. But again, I think given the environment, overall, not too bad of a report.
Yeah, and I think credit conditions, of course, continue to look at that over the course of this earnings season too, and how that's impacting some of the companies who rely on a good credit condition environment, as well as those who are trying to make sure that they're continuing to engage with clients. Credit quality performance here, delinquencies is something I'm paying close attention to as well. Delinquencies of $1.3 billion, that increased about 6%, primarily due to, get this, higher consumer loan delinquencies. So that's something that could be worth keeping an eye on for some of our viewers as we go on.
Yeah, and also ties into some of the commentary that we got from the larger bank CEOs also out this morning.